It's good to have you here, Joseph. Welcome. One of the notes caught my eye because it was basically using 2030 estimates to justify these price targets. I don't know if that was yours.
Well, first of all, thanks for having me. And yeah, look, we obviously have to forecast a little bit further out here for companies like Rivian, where there's a great growth story, but they're starting from nothing. They're ramping right now. We think that the ramp path they are on can actually be faster than what Tesla has accomplished from the first 10 years of their life for a variety of reasons. So we look at a myriad of different valuation metrics, including a 2025 sales target, as well as 2030 EBITDA and a 10-year DCF. So we do have to look a little bit further out to compensate for the growth.
Well, and again, if we look at the case of Tesla, it did take them a decade to basically, IPO and then reach the kind of scale that they're at now. So from that point of view, it totally makes sense. What was your make of the information's piece that Amazon had concerns about Rivian's batteries?
Yeah, look, all electric vehicles might not fare as well in colder weather. We think this is a known issue. It's tough to know based off the one report. I would assume that this is something that the company and Amazon are both well aware of and working to mitigate. Remember also, Amazon mostly has test vehicles now, and they don't necessarily have the final vehicles or the final battery pack and the final software configurations in the vehicle. So we think that can change over time. I don't believe that it will be a long-term impediment to the story. To the contrary, I think Amazon's involvement in the story, both from an ownership perspective, but more importantly from a customer perspective, is very important here, because Rivian is really going to help Amazon try to decarbonize that last mile. Remember, Amazon's last mile fleet is growing, and it has to go from 100% ICE to 100% electric.
So if we look at your estimates, and it'd be good to run through the numbers here a little bit, for deliveries, you're talking kind of about 1.25 million in 2030. How would that stack up against what Ford is likely to do, what Tesla is likely to be doing by that date, and again, kind of underpin the valuation at $90 billion, the market cap that it currently has?
Yeah, sure. So we do have a little bit over 1.2 million units by 2030. That's about 1% global share total. And then using our electric vehicle forecast, we think that'll be about 4% battery electric vehicle share. So, it's not insignificant, but I think there's still, room for growth. If you look at the Rivian plan here, right, initially, and what we really like about the story is, selling cars comes down to product, and we think Rivian has great product. We think the R1T is an exciting vehicle and can probably even appeal to consumers who might not have otherwise thought that they would want a pickup. The R1S, when it becomes available, I think instantly moves to the top of 3-row electric SUVs. And if you think about how they're positioned, a brand, outdoor, adventure, we've seen this work in other industries, such as like a Patagonia or a Yeti, but certainly even in automotive with Jeep, right? Jeep is certainly more of an outdoorsy brand, but if you look around, there's a lot of families driving around in Jeep vehicles, and we think Rivian is positioned a brand to be to capitalize off that market.
Shepard Smith here. Thanks for watching CNBC on YouTube.